Welcome to ACG's Middle Market Growth Podcast. I'm Carolyn Vallejo. As middle market companies grow, demands on their people, processes, and infrastructure can scale quickly. But as businesses scale, whether organically or as part of a PE portfolio, HR often becomes a bottleneck, and leadership teams are left trying to solve increasingly complex challenges. So what does it actually take to build an HR solution that can keep pace with that kind of growth? This is going to be part one of a two-part series exploring that question, and joining us today are Insperity's Chris Sloan and Mike Iapalucci. Chris and Mike, welcome to the podcast.
Glad to be here.
Thanks. Glad to be here.
We're so glad you're here. Can you tell us first a little bit about your roles at Insperity? Chris, let's start with you.
Yeah, Chris Sloan, Director of Private Capital Markets, focused on our private capital market strategy. We have private capital consultants on the team that work with private equity firms, management consulting firms, investment bankers to really identify some of the key challenges or strategies or human capital management people issues that are happening in the marketplace today and bring our many years of insight and business service offerings that we have to solve for those problems.
Got it. And Mike, how about you? Can you give us a little bit of an introduction?
Sure. Mike Iapalucci. I am responsible for Insperity's middle market and HR scale sales operations. I run a team of about 20 people that focuses solely on selling PEO to companies with 150 employees on up to somewhere in the neighborhood of 5,000. We focus on essentially any business that's looking to outsource their HR and gain support through our unique business model.
Excellent. And just now for a little bit of fun, we're asking guests, what would their walkout song be? So Mike, how about you start us off with that one? What would your walkout song be?
Well, I'm a kid of the 90s, so I'm going to go with Notorious B.I.G. Hypnotize.
Great.
And I know Mr. Sloan gets a kick out of that.
That's a good one.
Chris, what would you choose?
I'm going to do Back in Black, AC/DC. Get some energy going.
Classic. Love it. All right. Well, with that being said, let's get into our main topic today. We are talking about finding the right HR solutions for mid-sized businesses in general and PE portfolio companies in particular. So first, maybe we can talk a little bit about some of the major challenges and the bottlenecks that you're seeing in your work with your clients. Chris, I want to start with you here.
Yeah, I think one of the biggest misconceptions that we're seeing is that recruiting's always a primary problem. Recruiting certainly matters, but often the real challenge is what happens before the job is ever posted. So we see companies struggling because they haven't clearly defined the outcomes they need from a role, how that role fits into the organization, or whether the structure can actually support the company's next phase of growth. And specifically for private equity-backed companies, this becomes even more important. Often, if you think about it, the business is trying to scale rapidly, integrate acquisitions, enter new markets, professionalize operations. If roles, accountability, and organizational design haven't kept pace with business strategy, hiring more people doesn't solve the problem. And beyond that, retention, I think, is probably the number one thing that we're seeing. Private equity firms bring administrative engineering, they bring operational engineering, they bring financial engineering to the table. And I think one of the biggest areas I would say that's been evolving since 2020, since COVID, quite honestly, they're now starting to see that human capital management or HR engineering is becoming one of the most important factors to get the most out of the people that you have. I mean, let's face it, it's the largest line item on the P&L, and it should be something that is taken a lot more serious, both during LOI and obviously as we get into the 100-day change period.
All right. So it sounds like businesses should and maybe are starting to take a more strategic approach to HR. Can you tell me a little bit about how you're seeing operating partners maybe respond to some of the challenges that you just mentioned?
Yeah, what I'm seeing is the strongest operating partners are becoming much more proactive around human capital. They're treating workforce planning, leadership effectiveness, organizational alignment with the same rigor that they would apply, again, to the financial or operational KPIs that are developed. You know, when they start to look at the mini models, they start to analyze at LOI, post LOI. So I would say that's probably one of the bigger areas of focus that we're seeing proactiveness in the marketplace today.
Speaking of proactiveness, of course, it is always more difficult to kind of address a challenge once a deal has been made, once a company has been integrated, acquired, et cetera. So, ideally, investors would want to identify any HR related challenges before they acquire a company. So, I'm curious, Chris, when private equity firms are assessing a potential investment target, what are some of the things that maybe they miss when assessing talent and people risk?
Well, firms do a really good job, evaluating the financial performance and market positions and operational metrics. What happens, less attention can be focused on people related risks. And let's face it, that ultimately determines whether the investment thesis is going to get executed on or not, right? You have a very short hold period, 3 to 5 years. Typically, that's not the case right now, but typically, if you're not on top of that, it could be a real problem. So, as an example, does the company have leadership depth beyond the founder? Is there succession risk? Are key customer relationships, right, concentrated in one individual? Is culture capable of absorbing the kind of change that can happen, post acquisition? And so, what we found is the talent risk often doesn't show up on a balance sheet, but it absolutely shows up in outcomes. And so, if key leaders are leaving or engagement declines, or you start to see, turnover spiking, then obviously growth is going to be impacted. And so, the most sophisticated firms that we're working with, they view human capital diligence as important as any of the other diligence factors that they're reviewing particularly when they're taking a look at acquisition, if you will.
All right, Mike, I want to turn it over to you for a couple minutes. Chris mentioned how workforce dynamics have really changed a lot since 2020, since COVID. In the past few months, what have you seen actually work to drive post-merger success from a human capital perspective?
It's a loaded question, I think, to a degree, but the obvious is that post post 2020, we had the challenge of getting folks to an office if that was your intent, and then we had the challenge of it being a very competitive hiring market, and talent could, for argument's sake, almost write their own ticket. And I would say over the last 8 to 10 months, that has really started to finally flip. And many of our clients, many of the folks that we're talking to are working on strategies and approaches and incentives, maybe even in some cases, to get folks back into office spaces. I think they recognize that there is a major miss on collaboration and the power of collaboration by not being physically together when you could be. And there's certainly businesses that have evolved and are more efficient operating in a remote setting post 2020, and that's one of the positives that I think that we've all learned. But there's a lot to be said for when you can be together and collaborate, to getting together and doing that collaboration to figure out how to move your organization forward faster. And the other part of it is just that the hiring market has kind of leveled out, in my opinion, and from what we've seen. And the employer has a little bit more ability to have some control over it. For the couple of handful of years right after 2020 and after the let's go fully remote phase, the employee effectively was writing their ticket. And if I wanted to leave an organization and go to the next one and they wanted me, I could tell them you got to double my pay, and generally they would, or do something dramatic to that effect, as it were. And so we're not seeing that as much now, and it's certainly leveled out. And so now I think what is going to drive success from human capital perspective is figuring out a way to give people more access to things like personal development and the opportunity to forward their career. And so that's really what we've seen over the last, say, 8 months or so, and that's been a major shift.
Yeah, there are a lot of major shifts, as you just pointed out, and one of those, I think, would be fair to say, is HR technology. It's really evolved a lot in recent years. I'm curious, Mike, what some of the tech solutions are that you're seeing, maybe some of the challenges you're hearing about implementing that technology as well. I'm going to go out on a limb and say maybe artificial intelligence might be a part of this conversation.
Yeah, I think that's a safe limb to go out on for sure. There's a lot of things that I think the answer to the last question sort of have driven to an extent. Things like the need for greater applicant tracking tools and the ability to plan for what you're going to need to feed those tools to find good talent. One of the things that I could tell you firsthand for us, as an example, is the ability to have world-class technology that meets the end user where they need to be met and is nimble. And so that was one of the driving factors of the development of HR Scale with Insperity. And that's why at the beginning I said we go up to servicing folks with up to 5,000 employees. Is we've expanded the capabilities of our technology in partnership with Workday. And so from a tech solution perspective, we're seeing technology like that has historically been reserved for the larger companies, say Fortune 1000 or so, like Workday, coming down market. And we're seeing smaller companies that want to get more sophisticated with their technology, and that is one of the ways to do it pretty quickly from a human capital perspective.
Registration is now open for ACG's Aerospace and Defense Middle Market Leadership Forum on October 14th and 15th in Los Angeles. To learn more and register, visit acg.org/AD26. That's acg.org/AD26. Chris, I'm curious about your perspective here about some of the challenges of implementing some of the newer and more sophisticated HR technologies you're seeing out there right now.
Yeah, I mean, we talk about people strategies, and the issue is, a P&L will help you very quickly see, if my expenses are running high, or, my margins are off, my profitability is off. And the question is, okay, well then how do you start to analyze people challenges? And if you're going to have strong people strategies, which we've talked about already, then you have to have people analytics to be able to support that. And so I think what Mike is saying, and what we would both agree on here is that having real-time people analytics to help you make the right decisions is probably one of the biggest changes that we're seeing in the marketplace today. And of course, having accessibility to that is extremely important. And so the great news is there's a lot of new tech in the marketplace, and AI definitely is having a tremendous impact on that. But data is data, right? And you still have to have people that then come back and formulate and then start to execute on the analytical pieces that you pick up. And so technology by itself is great, but then you have to have people that come along behind it and use it. And so that's probably a disconnect, but it's also one of the greatest opportunities that's in the marketplace right now.
Now, switching gears just a little bit, longer hold periods are a key concern right now among investors, LPs. How is that trend driving how PE firms are thinking about talent within their portfolios?
Yeah, look, definitely hold periods are, we're seeing, 7 years, we're seeing secondary start to kick in. And so, the longer hold periods mean, firms can no longer just solely rely on, kind of multiple expansions, if you will, to generate returns. So human capital and operational execution become increasingly important drivers of value creation. And so we're starting to see firms take a much more, I would say, dialed in approach to, do we have the right people in the right seats to help us execute on this plan? And, I'm a more seasoned individual, and I've been in the workforce for many years. And I've always lived by this thought process, and the people that got you from A to B are not necessarily the people that get you to B to C. It doesn't mean that the B players aren't great. It just means, what am I doing to advance them? And what am I doing to keep them skilled up, if you will, in order to meet the demands of the marketplace today?
Well, you've both already shared a lot of takeaways for our listeners, but to close us out with any maybe final words of actionable advice that you would like to offer those who are trying to get HR infrastructure right within their portfolios or in any middle market business, I'm curious what that takeaway would be. Mike, could you kick us off there?
Absolutely. I think it's as simple as, look at what we're talking about. We're talking about HR infrastructure, human resource infrastructure. We're talking about people. And so to me, I think the way we buy things today, I do it myself. You go online, you do your research, maybe you talk to a person or two, but in many cases, you try and educate yourself as much as you possibly can before you have to talk to somebody to avoid getting sold, quote unquote. And I think that when you're buying something that is so important to the people within your organization, and generally those people your biggest expense and your biggest revenue driver, I think it's important to work with other human beings to figure out what the right solution is. And what I mean by that is talk to people at the providers you're considering before you make any sort of preconceived notions of what you need. And I think that if you do that, you can then get the right stakeholders within your organization to the table to evaluate a deeper level of knowledge of what you're buying. Because a lot of times what we're seeing is folks go out to the marketplace, they put an RFP out there, they get a lot of data back, they do a lot of research on the internet, wherever they might go, and they generally have their decision made before they even talk to a provider. And so at that point, they're trying to fit maybe a square peg into a round hole because they've determined that this provider looks really good on paper. When maybe it's like the engineering firm that builds playgrounds, but they put bridges on their website because they just want to capture everybody that's looking for an engineer. And so I'd say if you're talking about something with your people, work with people to figure out the right solution versus trying to overly automate things.
Work with people. I like that. All right, Chris, close us out here. What would your piece of actionable advice be?
Well, listen, I have the unique experience that I was actually a client of Insperity's as president and chief operating officer of an international organization with domestic distribution supporting Asia, Southeast Asia, Shanghai, Seoul, Korea. But the vast majority of our employees were here in the United States, multi-state, Rhode Island, Georgia, California. And so I think my advice is this, and I know this because I've lived it with Insperity. I lived it with Insperity through COVID. Don't wait until a people issue becomes a business issue, right? So the highest performing organizations proactively invest in their leadership and their organizational design, their talent development, employee engagement, all of those things. They need the scalable HR infrastructure to support that. And so whether you're a private equity firm or you're a mid-size organization, your ability to execute your strategy comes down to one thing and one thing only, and that's people. And so markets change and technology is definitely changing, right? And business plans evolve throughout the year. But organizations that consistently outperform are the ones that have the right people strategies. And Mike will tell you, we've lived by that at Insperity for 40 years. And so when you get that alignment right, you're not just creating a better workforce, but you're creating that stronger, more valuable business. And so I would just say this: in today's environment, talent is not necessarily just an HR issue; it's a value creator. It's a strategy, and companies that win are the ones that treat human capital with the same discipline that they apply to their capital allocations, right? And so that's really, I would say, if I was going to leave one nugget, it's don't look past the one thing that's the most important thing in your organization, and that's just your people. And we live by that. Mike and I live by that on a daily basis, and that's what gets us passionate about what we're able to do here at Insperity.
Yeah, I can tell, I can hear that passion there. And this is quite a big topic, especially as both of you have emphasized. HR is really becoming an increasingly strategic part of business operations, of value creation. So considering how big this topic is for our listeners, please stay tuned for part 2 of our conversation with Insperity, which will be coming out later this year. In the meantime, today, that was Insperity's Chris Sloan and Mike Iapalucci. Thank you both so much for joining us on the podcast.
We appreciate you having us.
Our pleasure. Thank you.
Thank you for listening to this episode of the Middle Market Growth Podcast. Hear more episodes and discover more M&A thought leadership at acginsights.org. If you haven't yet, please subscribe at Apple Podcasts, Spotify, or wherever you listen to podcasts, and don't forget to rate and review. The Middle Market Growth Podcast is produced by the Association for Corporate Growth. Learn more about us and discover new opportunities to network with middle market deal makers at acg.org.